In our last strategy report, 31st of May, we warned that although we believe that the larger trend for stocks is higher, we were likely to see a weak market in the near term till July or August at least, on 3 counts. Number 1, Eurozone debt. Although bond yield spreads are clearly pricing in some kind of restructuring, extension of maturities, or haircut to the principal, LIBOR OIS spreads, which is a measure of risk between banks, is on the decline. Therefore, we think a credit event is likely, but markets are telling us it won't cascade into a contagion. Nevertheless, a credit event would send markets lower for a time. Number 2, QE2 is coming to an end. Conventional wisdom has it that the absence of QE2 would affect the economy. We hold the view that because money printed was never loaned out in the first place, the evidence is against QE2 being responsible for the economic recovery. Instead, we believe QE2 was responsible for risk asset price inflation like stocks and commodities, and may have only had an indirect link to the economy through the perception of wealth. However, because the real effect seems weak, we believe econ numbers will not be affected much by QE2 ending. Number 3, the global economy is going through a soft patch. Econ numbers the world over have softened in sync, and investors are worried over a hard landing. We are of the opinion that hard landings are unlikely. In China, although inflation seems rather sticky, even as food prices drop, we think the economy can withstand a couple of rate hikes, as consumption and industrial production expand sequentially at a reasonable pace. Investment also continues at a high rate following the drive in low-cost housing. In the US, although manufacturing has slowed down somewhat, services has picked up. Moreover, corporate balance sheets are cash-rich and are likely to deploy this cash for investment as US companies expand to meet overseas demand. We thus believe that in the second half, growth should pick up. Barring further macro uncertainties, the larger positive trend for stocks should reassert itself. Thank you.